All eyes are on Paris this week. A lot of people are following the haute couture shows, but also something else happened in Paris this week. Maybe it's not as exciting as the haute couture garments, but nevertheless it's very important because LVMH, one of the biggest fashion conglomerates in the world, just announced their 2024 financial results. And why is this so important? It's because we get an overall idea of the industry, the luxury and the fashion industry, by looking at the numbers of this big conglomerate. I'm sure you have also seen this. There have been a lot of articles and videos about the downfall of luxury recently. And as you may know, I love numbers, so I always look at the numbers behind these theories and stories. And I thought it might be a good exercise to look into the 2024 financial year of LVMH and see if this also hints at this alleged downfall of luxury. In general, I was waiting, like so many other people, the experts, the analysts, for the results for Q4. The last quarter of the year is usually the most important quarter in retail. Because of Christmas, in general, we can say that 2024 was one of the slower years for LVMH, and I wanted to look into what this tells us for the future. Is this a permanent situation at the moment, or can we already see changes for 2025? Before I dive into the details, just quickly, this is a non-sponsored video and I'm sharing my research, my analysis and my personal opinion here. And this video is not intended as financial advice or recommendations. If you have further questions or if you want to know more about investments, please seek the advice of a licensed professional. I based my analysis on the information which is publicly available online, for example on the LVMH website, in the investors section or on Yahoo Finance. And this analysis is done in euros. I know a lot of you are in the US, but I wanted to keep things simple. So I based it in euros because first of all, the company is based in France. They report in euros, and also at the moment the exchange rate is relatively close. So I wanted to keep this video simple and not make it even more complicated and longer than it is. I hope you understand this. And please don't worry, this is not going to be a super technical video. This video is for everyone. I feel like a fitness instructor here because also in fitness there are different levels. And similarly here, when we look at the financials of a company, some of you may be experts, some of you may know all the financial terms, you may be familiar with LVMH's data, some of you may be very new to numbers. So I wanted to make something where we can all come together and discuss this. So if I explain some terms and you already know about them, please don't get annoyed. This is just to keep everybody involved and basically create a level for all of us. Very briefly, who are we talking about? LVMH, as I said before, is one of the biggest fashion conglomerates in the world. It's owned by the Arnault family. You probably have heard about them because Bernard Arnault frequently ranks among the richest people in the world. At the time of filming this video, he was ranking at number 5. So I'm sure the name probably rings a bell for you. And this conglomerate, as the name Louis Vuitton Moet Hennessy suggests, they own fashion. So Louis Vuitton, Dior, many other brands that you know, but they are also in wines and spirits, for example, watches and jewelry. For example, they recently acquired Tiffany's. They also do perfumes and cosmetics. For example, Dior Parfums is something that they also own, and they do selective retailing, which means that they own retailers, for example, like Sephora, this cosmetics retailer, or also DFS from Hong Kong, and also the department store Le Bon Marché is owned by LVMH. So as you see, it spans across multiple products, and to make it easier also, when you look at the financial data of the company, all of these products are structured in these 5 big groups that I just mentioned. The results were announced on January 28th, and immediately afterwards there was also the webcast, which I watched for you. And before this announcement, a lot of experts actually had very high expectations. This was also something that Luca Solca of Bernstein said, because Richemont previously had just announced a very good quarterly result, and Richemont is a competitor for LVMH in quite a few areas. Among these areas also jewelry, because they own Cartier and Van Cleef & Arpels. So a lot of people had very high expectations also for LVMH. There were other experts who did not have high expectations. They actually expected a decrease in revenue, and then the actual results were mixed, I would say, because some expectations were exceeded, but these very high expectations fueled by the Richemont numbers could not really be reached. And when the markets opened the day after the announcement on January 29th, at the time of filming this video, the stock had dropped by 5%. In this webcast, Mr. Arnault, the CEO, gave a statement, and also the CFO, Jean-Jacques Guillauny. And Mr. Arnault said it was a robust year, une année solide. And he also said that 2025 has already started promisingly, but he didn't give further details. In general, he said 2024 saw weaknesses in Asia, also uncertainty in America because of the election year, and quite good results in Europe. He also pointed out that the fashion and leather goods segment did well. I just want you to remember this because I'm going to go into the details later. And he also mentioned that in selective retailing, Sephora delivered very good results, but DFS was struggling. DFS is a retailer in luxury goods based in Hong Kong, so the main customer base is also influenced by mainland China, and because of the economic situation in the region, DFS is currently struggling. Mr. Arnault also pointed out positive things from the past year, for example, the contract with Formula One, which was signed for 10 years, and the other one was LVMH's involvement in the Paris Olympic Games. But this involvement also meant that the recurring operating income was affected, because he also explained that this also influenced the drop in the recurring operating income. I'm going to go into the details a bit later. Let's look into the details, and let's start with the revenue, because this is the figure that a lot of people focus on. In 2024, the revenue of LVMH was 84.7 billion euros. In 2023, it was 86.2. LVMH announced an organic growth, positive growth. So now you will say, but you just said 84 versus 86, isn't that less? It takes a bit of time to get used to the documents of LVMH. They differentiate between organic and reported growth. I will try to keep this as simple as possible. So there was organic growth of plus 1%. In general, when you hear organic growth, this means that a company managed to grow internally by increasing output, increasing sales, not by acquiring companies, other companies, for example. So now we have this organic growth, which was plus 1%. But then overall, we see impacts, negative impacts, and they were twofold. The first one was impact from consolidation efforts. For example, there were divestments. For example, Off-White was divested in 2024. And the second one was currency effects. I'm not going to go into all of the details. If you want to learn more, let me know in the comments below, and we can discuss it over there, but I want to keep the video as short as possible. So these two dimensions negatively affected the growth. So that's why we see this lower result, and this is what you then see. You see the organic growth plus 1%, and then these negative impacts from consolidation and also from the currency. Now let's look at the segments. A lot of people at first focus on the negative development in the wines and spirits segment, which is negative, but I always say when we look at these numbers and charts, we also need to compare the pie. So what do I mean with this pie? It just means the amount of money that is generated in this segment, and the segment wines and spirits generates less revenue than fashion and leather goods. And in general, fashion and leather goods is basically, I would call it the powerhouse of LVMH, because they generated about 41 billion euros in this segment in 2024. So we can see almost half of all their revenue is in fashion and leather goods. And this is something that I find so interesting about LVMH, because at first you look at LVMH, you see the different segments and products, and we think it's very diversified, but actually it has a big exposure in fashion and leather goods. What does this mean, diversification in general? It can be good if a company is diversified, because if you have issues in one segment, it might be balanced out by another segment. It can be an advantage if you're not diversified, because then you know one particular segment very, very well. But this also means that you have more exposure in that segment. So if something is moving in a more negative direction, you may be adversely affected. So this is always something we need to keep in mind also when we look at LVMH. Now let's look into this fashion leather goods segment, because I mentioned in my introduction, maybe you remember, I said Mr. Arnault said fashion leather goods did well. Mr. Guillaume said it was stable. So when we look at it for the whole year, it was negative growth, -1%. What does negative growth mean? It means they made less sales, -1% less sales than in the previous year. So there are many ways of looking at it. First of all, some people say it was actually better than expected because some analysts expected a -3% of growth. So now we are at -1%, so maybe this is positive. But you can also see it in absolute numbers, because in absolute numbers, it is about 1.1 billion of revenue. Yes, we know it's 1% of the overall business, but I would still look at it and say it's still a billion that the company loses. And why would I look into this? So let me explain this quickly. This is actually a trend that we've been seeing over the past quarters, not only in 2024. This already started in 2023. I mentioned this in the video about the Q3 results. It started with double-digit growth in the first 2 quarters. Then it dropped to 9% in Q3 2023. And since then, quarter by quarter, it decreased and then also moved into the negative growth numbers. And only this last quarter of 2024 is looking a bit more promising, -1%. So people can say maybe it goes into a positive direction again. I would still be a bit careful because it was a trend that was in the making for some time. So we need to see in the future months how this is going to develop. And because I'm covering luxury on this channel, I would also like to look into the jewelry and watches segment, because the development was actually very similar to the fashion and leather goods development. The only difference was that in the last quarter of 2024, sales grew again positively by 3%. And according to Mr. Arnault and also Mr. Guillaume, this was due to the successes at Tiffany's. So we now know what happened. What are the reasons for this? And this is quite difficult to say as an external person, but I would just like to give you my views on it. So one reason, in my opinion, may be the overall economic climate. In many countries, we have inflation, the cost of living is going up, rents are going up, energy prices are going up, and then overall we see that people spend less on the one hand because they have to save or they want to save more. Also, they hold off buying new things because they want to see how the development over the next months is going and then maybe make the purchase decision a bit later. And a lot of journalists refer to the so-called aspirational customers as one reason why there are issues at the moment in the industry. What do they mean with this aspirational customer? So an aspirational customer strongly identifies with the brand, even though they might not be the core customer who just can walk into one of these brands and then drop a few hundred thousands on couture items. They very often focus on the lower segment of the brands, the small leather goods, bags, also small accessories, scarves, for example. And I think over the past years, this was also a strategy that was heavily focused on by many brands, not only the ones in the LVMH group, also by others. Gucci is a very good example for that. And if you then have an economic climate that is becoming more difficult, those aspirational customers are the first ones who probably hold off buying because they either can't or don't want to spend the money anymore. And then the brands feel it. And then the other negative effect that I always think about is those customers who can afford the very expensive segment of those brands may get a bit, I'm not sure if I say alienated, but maybe a bit bored with the brands, or they say, I want something special if I spend that much money. That's just my personal theory. The brands rarely comment on that. I'm curious what you think about this. Do you also think that this is a negative development that the brands created for themselves? Please let me know in the comments below and we can have a discussion there. In my opinion, the second influence is Asia, the big China question. For the longest time, China has been seen as the holy grail for luxury brands. More and more brands moved into the country after it joined the WTO. And then you saw more and more stores opening, also Chinese customers discovering the brands. And it was fairly easy to make money there because also from a psychological perspective, if you couldn't have certain things for a very long time and suddenly you can have them, it's so exciting, you want to buy this. This is probably something that also happened in China. But in recent years, especially since COVID, the economic climate in the country has changed, and this also means that Chinese customers spend less. They also spend less on luxury goods. Mr. Arnault also spoke about this in his statement, and he said that he is aware of this current economic climate, but he thinks it will be a gradual development and it will take 2 years, according to him, for the country to recover. In my opinion, there may be another reason in addition to these economic changes. Maybe also the local tastes of Chinese customers have changed. As I said before, in the beginning, everything was very exciting. It was also exciting to have logos on the products. And over time, I assume that also the Chinese consumer got to know the brands better and better. And maybe they are just bored with the current product range, or they want something new. It's not enough to have a Western logo on a product anymore. In my opinion, a lot of brands, they tried a bit to adapt to the local taste, but not that much. They basically just took products that worked somewhere else and offered them in China. And also because of this overall development, the affluent Chinese consumer may look for something else. Maybe it's not enough to have a product anymore. Maybe there needs to be an experience around this. And in many articles and videos, I hear the Chinese consumers are less into these experiences than other groups. But I do think it is a thing. I personally would look into this in the long run because I think this is also going to be a topic in the Chinese market. And maybe this is also something that the luxury industry can learn from the travel industry, where it's also more experience based. So this is one approach of seeing it. I do think that a lot of brands need to rethink their strategies in Asia, not only in China. A question relating to those experiences was asked during the Q&A section, but neither Mr. Arnault nor Mr. Guillaume really answered this. And one last thing that I would like to say about the Chinese market in general, we see a big push towards local brands, local products. Chinese consumers become prouder of their own brands and products, and this is also something which is pushed by the government. So this is maybe also something that I see that could influence this overall development. And coming back to the statement by Mr. Arnault about the Chinese recovery, that it may take 2 years to recover, I would say we need to wait and see, because at this point in time, it is relatively unclear what the economic reality will look like. And just very briefly to also touch upon a point that was heavily discussed during the past year, because a lot of journalists kept reporting that the sales increase in Japan may balance out the reduction in sales in other regions in Asia, especially in China. And I already looked into this in Q3, and also similar when we look at the whole year, this explanation can't really be supported, because if we look at it, there is a reduction of almost 3 billion euros in the Asian region, excluding Japan. When we then look at Japan, yes, there was an increase in sales of 1.6 billion, but this is very simple math, because we see it's a difference of still 1.4 billion that we are kind of losing in this equation. So I think this hypothesis can't really be supported. And something interesting is also the regional split, because Europe and America make up 25% respectively, and then Asia makes up 37%. According to Mr. Arnault and Mr. Guillaume, this is a balanced regional split. We can argue about this, if it's really that balanced, but this is how they see this. And Mr. Arnault also said he's quite satisfied with this, because this means that if you are more diversified also regionally, you decrease a potential negative exposure if something goes wrong in one particular region. And when I heard this, I actually started listening a bit more, because I find it interesting. Maybe you think the same. Over the past years, it was always Asia, 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 and mostly China, China, China. And suddenly problems come up, and then the narrative changes. So it remains to be seen what they are going to do also within the Asia region. I find it interesting because a lot of luxury brands are now moving towards India and see this as the next holy grail, but I also see challenges coming up there, because India is an attractive market in terms of population, of course, and also the economic development, but it's not an easy market, because similar to China, it's not homogeneous when it comes to geography and taste. Also, India is a country where fashion and also jewelry has a long tradition. Technically, India does not need Western brands to tell them what is a good fabric, what is good jewelry. The competition from local brands is very, very high. Of course, there's interest for these brands. Of course, people are interested in foreign luxury brands, but I would like to use one example, and this is the jewelry segment. I think it may be challenging for foreign companies in that market because there are a lot of local jewelry brands or local jewelers who make very beautiful jewelry. Very often they are the suppliers of these big conglomerates. People know that they rather want something which is unique and customized. And you may also know that India is a big supplier also of diamonds. So some people may think, why would I buy a diamond from a European brand? So this is something that I see as a challenge for the Indian market. I'm not saying this market is not interesting or there's not potential for the Indian market, not at all. I do see the potential, but I think it's sometimes a bit dangerous. A lot of people focus on the potential. They say, it's not working in China, let's move to the next one, let's move to India, it's gonna be fine, and they don't see the challenges ahead. Another very interesting thing was also the positive outlook of Mr. Arnault on the American market. It's not surprising because he attended the inauguration of President Trump recently, and it is sometimes interesting to watch these calls because people think they are boring and nothing is going on. But then in this call, Mr. Arnault talked about the favorable economic environment that he sees in the US compared to France. He also complained about France. And then he also dropped casually that he had a conversation with Mark Zuckerberg at the inauguration. So sometimes I find these things so funny because you think it's a call about financial results, and then you also see these things in these calls. Now we have covered the fashion and leather goods, also the jewelry and watches, and the wines and spirits, and we see rather difficult times in 2024. We have a slightly different picture for selective retailing and perfumes and cosmetics. Let me start with perfumes and cosmetics. There is a very big potential in this market that LVMH may want to capture because this relates to this aspirational customer. And at business school, the typical example for an aspirational customer, what they would buy is also nail polish, cosmetics, because it's relatively cheap compared to the other products and they can buy a part of the brand. And because there are changes in the economic climate, this may be a reason why LVMH wants to capture the cosmetics and perfume segment more. In general, it seems to be quite an interesting segment, but it's also a challenging segment because competition is very high, maybe even higher than in the fashion segment, and it's not the core competence, I would say, of LVMH. But nevertheless, I think this is again where we need to wait and see how the industry overall is going to develop and what LVMH is going to plan in these segments. One of the success stories is selective retailing. Sephora, the cosmetics retailer, according to Arnault and Guillaume, delivered very good results. They also mentioned Le Bon Marché, which is also part of the group. They did say that there were challenges with DFS. They are headquartered in Hong Kong, and the major area is basically Hong Kong and Macau, where they own a lot of luxury outlets. They are also very often in airports, and also here you can see these effects from the economic climate in Asia. Now we have covered this big section of revenue. Another key measure that we need to look at, of course, is profit. And this is where a lot of people were actually disappointed because profit reduced by 14%, and in 2024 it was 19.6 billion euros. Also, the profit margin was less because it dropped from 18% to 15%. Also, the operating margin decreased. What is this operating margin? This is the operating income over revenue, and this decreased from 26.5% in 2023 to 23.1% in 2024. What were the reasons for this decrease in profit? Mr. Guillaume named, amongst others, also one-time costs, like, for example, the involvement in the Olympic Games as a reason. And also gross margin decreased from 59.3 billion euros in 2023 to 56.8 billion euros in 2024. What is this gross margin? This is when you take the revenue and then you deduct the costs of goods sold. What does that mean? You deduct what it costs you to produce the goods that make the revenue. And Mr. Guioni gave one reason impacting this negatively, because he said that the costs for producing the goods have increased slightly faster than the revenues. And this is also really funny that I noticed during the call, because later on Mr. Arnault in the Q&A session, he talked about this also. And then he said, yeah, we see from other brands that they kept increasing the prices for no reason. I think we all know who he was referring to. And he also made sure to say that this is not the strategy of LVMH. So I'm not talking about the brands within the LVMH group, he said during that Q&A session. But I find this kind of amusing. You sit in this call, you are very focused on all these numbers, and then you also see the human component when somebody makes a comment like this. Mr. Arnault also said that he was positive for the year to come. He also said that the year started positively without giving details. A lot of people assume that he is referring to the most recent campaign in Louis Vuitton, because as I said in one of my other videos, they just relaunched this special edition with Japanese artist Takashi Murakami. And I think the brand hopes for a big boost in revenue and maybe also brand awareness by doing this campaign. When this campaign was first launched in the early 2000s, this is exactly what it did. It was a big boost for revenue, but also brand awareness, because at the time Louis Vuitton was kind of there, but they positioned themselves as a really, really cool brand. But I think it's a bit too early to say if this was successful, if they did the same. And I'm also a bit careful to say this is the major reason, because this is one campaign of one company within the Louis Vuitton Moet NSC conglomerate. And let's close this number section by looking at the dividend, because a lot of people who own LVMH stock want to know, will there be another dividend? And yes, there will be. There is a suggested dividend of 13 euros, and it has basically two components. One is €5.50, which was this interim dividend, which was announced on 4th of December 2024. And the other part is the €7.50. So it is the same amount as for 2023. And I think it was Mr. Guioni who said that this is a positive sign that also in times where the economy is challenging, they still have a steady dividend. Now, what is my personal outlook for LVMH? I will closely watch the development in Asia and also the development for the fashion and leather goods, for the reasons that I mentioned before, because for me these are the big challenges at the moment that I see overall in the market, also for the luxury brands overall. I'm taking a wait and see approach when it comes to these economic developments, not only in Asia in particular and in China in particular, but overall, because I think there are challenging times, but it is very difficult at the moment to forecast anything rather concrete. I do think that this topic with China will be something that the brands need to look into. I also think that India may play a bigger role, but this remains to be seen. And sometimes it also feels like this musical chair game that we've seen with the creative directors, that there's a lot of change. Maybe the luxury brands also see it like this, that if one country doesn't work, they just move to the next one, and it's kind of the musical chairs game in terms of the region. Another big topic will also be Tiffany's, which was acquired by LVMH and is currently undergoing new strategies. It was a big topic during the Q&A section and also during the statements. Mr. Arnault also said there will be restructuring and that people will be laid off. This is something that he also said during that call. So this is also something that a lot of people are going to watch closely. And one big topic which I will also follow closely is Dior, because at the moment there are a lot of rumors around this other powerhouse of the LVMH brand. One of the analysts also asked a question relating to those rumors about the creative director. Some people say that Maria Grazia Chiuri may leave soon and somebody else may come in. There's a lot of speculation around this, but then Mr. Arnault answered this question and he actually, in my opinion, kind of dismissed it. He said, look around in the room. A lot of people in management here have been with us for a very long time, for 20 years or longer, because we are a conglomerate or a company that values continuity. So he kind of dismissed it. But let's see what's going to happen, because we know from other brands, Chanel, where there were rumors last year and then the rumors were dismissed and then something happened really fast. So this is also something that I'm going to closely watch. And now we have reached the end of this quite technical video. I hope it was not too much finance. I hope you learned something, and if you did, please let me know by subscribing to my channel if you haven't done so already, and also by leaving me a like. It really helps me. This is my feedback for producing these videos. If you want to read more fashion related articles, you can also head over to my website thepinklookbook.com, and please also check out my fashion label Pelagona. And if you enjoyed this financial perspective of fashion, if you want to learn more, I have another video for you where I analyze if designer bags are really a good investment. Thank you very much for watching this video, and see you in the next one.